Hi, this is Xavier, and I have a question for you. What is a fixed indexed annuity? You don't know? Don't worry, I have the answer. When it comes to preparing for the future, different types of annuities are designed to do different things. One way to help you meet your long-term needs for retirement income are fixed indexed annuities. A fixed indexed annuity offers the opportunity for accumulation without the risk of losing money in the market. And that's something that should be into your future plans. Now, you need to know that fixed indexed annuities provide tax deferral, guarantees against the loss of principal due to market downturns, potential for credit and interest, and the reassurance of a death benefit for beneficiaries. So, what else goes on behind the scenes? Let's take a look. Think about annuities in two phases: accumulation and distribution. Of course, the accumulation phase comes first. That's when you build your retirement savings and take advantage of the opportunity to grow your money income tax deferred. The second phase is called distribution, or the income phase. That's when you start receiving income money from your annuity, helping you live your retirement the way you want. To begin the accumulation phase, you invest money with your insurance company. That can be done in one lump sum or with various payments. That investment establishes the future benefits of your contract. During that time, your annuity can earn a fixed rate of interest that is guaranteed by the insurance company. Or, if you're seeking additional accumulation potential, you can choose to allocate to an external market index, like the S&P 500 index, where you can earn interests based on positive changes that occur in the external market index. There is also something called an annual reset. It's a term that refers to a fixed indexed annuity crediting method. Indexed annuities credit a level of interest to the contract owner, and that level of credited interest can be indexed or linked to the performance of equity markets. With annual reset, you lock in the gains your contract receives each year. There are limits to how much you can earn. However, the annual reset also benefits you in years when the market is flat or down, protecting your principal in previously credited interest. And following any contract you're in with positive allocation performance, it can build value even if your index has not recovered from previous losses. That's because annual reset is determined by changes during the individual contract year. Keep in mind, surrender charges may apply in the first several years of your contract. On the flip side, you can choose different allocation options and death benefit options, and defer paying taxes on the interest you earn to start receiving money from the contract. When you're ready to start receiving income from your annuity, you will need to specify how you want your income distributed. Don't worry, you won't have to decide until you're ready to start the distribution phase. When the time comes, there are several ways you can receive the amount allowed by your contract: as a lump sum over a set period of time, or as an income stream that will last for the rest of your life. That's the idea. So, if you're looking for principal protection from market downturns, tax-deferred growth potential, one or more index allocation options to choose from, death benefit options, and guaranteed income for life, it may be worth looking into a fixed indexed annuity. For complete information, ask your financial professional if a fixed indexed annuity is appropriate for your needs.